I do want you to understand what some of the major signals are that it's potentially time to even the long and shorts out, or even to lean more on the long side than the short side. And so I want to cover several concepts with you today, or several things, or several signals or signs that will lead you to know when it's time to lean on the long side. All right. All of you who are not part of my trading team, who are not part of my organization, and the journey that thousands all over the world do take with me, it's to sort of lift the veil, if you will, and to give you a small little peek behind the curtain, if you will, to give you the opportunity to see what we do every single day, all day long. This is what we do every single day. My traders are trained every hour of their entire lives. They are directed, they are guided. We are constantly doing breakout sessions, study sessions, very much like this, going over trades, zeroing in on commonly committed errors, tightening them up, tweaking, adjusting, correcting. And this live segment is giving all of those who are not part of that an opportunity to see a small little piece of the work that we do. And at the same time, even this little small piece, guys, I guarantee you, is going to elevate you beyond where you are today. So the first and probably, and I can't say it's the most powerful, but it's very powerful. The first thing is what I would call frequent no follow through. So, right, you have frequent no follow through red bars. So, what I mean by that is when solid red bars, power red bars, have no follow through, which means that after that solid red bar, you don't get another lower red. You might get a red like this, but that red is not lower. And the key, the real key, is that red, that no follow through red bar gets taken out. Now that's one scenario of a solid red bar that experienced no additional red after it that was lower, and that eventually got its high taken out right there. When you start to see a series of these, when you start to see them, this scenario start to pick up in frequency, it's time to flip back to the long side, or it's time to focus a little heavier on the long side. This is one of the key signs that you are at or near a bottom, because remember this, write this down. Solid, powerful red bars have an 82% follow through rate. So 82% of the time, this bar is supposed to produce more red. 82% of the time. When you start to see that statistic break down, and you start to see that solid red bars are not following through anymore. In fact, solid red bars are stopping dead in their tracks, and they're being taken out to the upside. That's your bottom. Don't confuse this. Okay, let me show you. Solid red bar. And then you move up from there like this. Don't confuse that as the complete setup yet, because that could just be the dead cat bounce that leads to this. So there are really two components to it. There's zero follow through, or little to no follow through, and a taking out of the high having produced no follow through. So the two parts are required. Now, with that being said, you don't always have to take it out. As long as you take out most of it, it kind of still counts. The best ones obviously are if you have taken out the whole red top here. Now, what do I mean about little to no follow through? That's important to understand too. So we have the no follow through. The little to no follow through is that you get a little one, a little slippage, but now you get it. That's that. That's why I always specifically say little to no follow through power bars. That's what I like to call them. Long name, but it's very descriptive. Little to no follow through power bars. This had a little bit of follow through, and that counts. That's okay. It doesn't really matter if from here there's no more follow through and you ultimately take out the high right there. You can see the time frame doesn't really matter. Here is a solid red bar. And remember that's going to have an 82% chance of follow through. So that's why I often, if I'm shorting into solid red bars, I will dive into violent red bars knowing that more than 8 times out of every 10, I have money eventually, because 82, that's 8.2 times out of every 10 times, you're going to experience more downside. All right. So we get this big fat red bar here. We get a secondary big red fat bar, and there's little to no follow through that proves that that was basically the bottom, at least for now. Are there location specifics? Location is always valid. The further away you are from your key moving averages, the 20 and 200, the better the odds that it is truly the climactic bottom, right? Okay, so this red bar was near the 20, and this one gets far away from the 20, right? So the further you are away, the greater the odds that it is the bottom. Always remember that. All right, far away from your key moving averages increases the odds of a turnaround. All right, now look at this fat red bar. But see, it originated from the 20. So that doesn't qualify as the very, very best location. And this is why, in my opinion, this bounced a little bit, but didn't come anywhere near to canceling the bar out. And boom, there's your follow through. Now, this one did. All right. You had solid red bar here. Okay, little to no follow through, and boom, there's your takeout right there. And that's a pretty sizable move right there. That's a $2,000 move right there. That's big. All right, it's big. And this, guys, this was the sign. This was the sign that a bottoming characteristic was starting to form. This was very significant for me when I saw this. And okay, we fell back hard, but it didn't really significantly go lower. So now I'm looking at that drop and I'm saying we're gaining distance. We're not going lower. This looks very bullish. Look at that. Now, in reality, this should have been the low. It's basically exactly the same. Sharp drop, move away. And if you look at that pattern, that's exactly this pattern. Drop, move away. And so a lot of times these bottoms, they end climactically. So they end with a strong plunge, which is sort of like that last slamming of anyone with hope. But it is the no further. Why is this thing not moving further? There might be attempts, but why is this thing not moving further after such a slamming? And the takeout of the majority, it's best if the whole bar is taken out, which basically occurred here. But this move up, that bar went all the way up there. It pretty much went all the way, which gives you the view. Remember our percentages, right? So if you stay in the lower half, you're likely to make a new low. But if you get all the way up here, you're likely to not make a new low. Should all know some of the key turning signs, right? Dual bottoming tail bars are very powerful turning signs. Double bottom tail bars, very powerful turning signs. You all should know this. But I do want to focus on the solid red, no follow through takeout events. So you have something like this where you start to see no follow through frequently. So let's take a look at this. So this red bar had that low, and there's little to no follow through, and we take it out. Doesn't go tremendously far. It's still a decent move, but you start to see this happen. That red bar, no follow through, and eventually gets taken out. This fat red bar, no follow through, and eventually gets taken out. That fat red bar, no follow through, and eventually gets taken out. That fat red bar, no follow through, and eventually gets taken out. Like you start to see it over and over and over again. This is the bulls winning. This is the bulls stepping up. Do you guys see that? This is the bulls stepping up on collapses. Instead of the bulls disappearing on collapses because they think it's lower, they're stepping up on collapses. Solid red. A little wider there. No follow through. We know that as a bull 180, obviously. But what I don't want, I don't want you to just say, "Oh, Oliver, this is a bull 180." Not a bull 180 is one version of it. But remember, you can have this, and then it goes, or it goes like that. The bull 180 is one version of it, but there are other versions, so it's a broader category than just a bull 180. Now, so we have the no follow through, the little to no follow through power red bar effect. The other effect is clearing events. All right. So in a bottoming scenario, you start to see a lot of stocks basically drop, fail to drop anymore, and go sideways, and then experience a clearing event somewhere away from the drop. When you start to see that become more prevalent, that start to show up in stocks more frequently, your market is bottoming. All right. And so even on a micro time frame, you start to see things like, here's your drop, and here's your sideways, and boom, there's your clearing. That's more of a climactic bottom. You climactic drop and bottom out, right? But the most prevalent ones I want you to focus on are the two that I just explained to you. That fat red bar, no follow through, red bar gets taken out. Whether it's taken out later or right away, but when you start to see fat red bars don't follow through anymore, solid red bars are not following through anymore. These reds are not following through. Do you understand? They're not following through. That's bullish. The reds can't gain momentum. Solid red can't gain momentum. Solid red can't gain momentum here. Solid red can't gain momentum here. All right? Solid red can't gain momentum. Do you guys see this? And it just starts to show up all over the place. And those are signs of the market potentially turning to where, not that you ignore shorts now and go full-fledged long, it's just that you can now balance the two sides out again. I want you to practice finding these scenarios where you say, that's a solid red bar, but it didn't follow through and the high got taken out. This was a solid red bar. It had one extra little follow through and then got its red taken out. Like, why is red now not following through? And zipping. When you see that over and over, your market, you start to see that frequently, your market's changing. That change might not be permanent, but it will be a while. Solid red, little to no follow through, and boom. You see? Solid red, no follow through, and boom. You just start to see these things over and over now, right? I'm going to do Starbucks. I'm just going to just think of symbols because solid red, solid red, solid red, solid red, solid red. So just make sure that it's fairly solid that you're looking for. Compact, solid. They're the ones that have big, these should be following through to the downside, but they're not. Here, solid red, no follow through, and clearing right after. Remember the definition of a clearing elephant bar is 5 bars or more. It's clearing out 1, 2, 3, 4, 5 or more. That's all you need. We got the 5. That qualifies as a clearing, and that clearing is right after. So you have both in the same play. That clearing is right after a little to no follow through red bar event. All right. This fat red bar is the little to no follow through. It's just one extra little one. And that marks the low. Now, of course, guys, when you start to add position to this, if you add position to anything, it becomes more powerful, right? So if you get a fat red bar, no follow through, take out the high at the 200. I mean, come on. Or at a prior low. Or way below all the moving averages. You understand? So the position or location only adds, if it's a good position or good location, it adds extra credence to the scenario. Fat red bar, no follow through, take out. Fat red bar, no follow through, take out. Here's the little to no follow through and take out. Here's your clearing. 1, 2, 3, 4, 5. It's all here, guys. It's all here. You got this? Fat red bar, little to no follow through, takeout play. The location makes it more powerful, and the clearing elephant bar away from the drop. See, that's the drop, and then you get the clearing. When you start to see fat red bars fail on you to follow through with increasing regularity, that will mean that green fat bars will, so the ball's been passed to green bars, which are going to have good follow through. See, these green bars have good follow through because the red ones have stopped having follow through. Either one team's going to have the ball or the other team's going to have the ball. And all this game is, guys, is just determining which team has the ball. I mean, even here, look at this sharp drop here. And no follow through. And then immediately comes the clearing. So the red one didn't follow through, but the green one did, telling you that, yeah, the ball's been passed from red to green. Psychologically, it's not very easy to play. Why? Because the fat red bar creates fear. That's what makes it not easy to take, because boom, like the fat red bar slams. But that slam, the way you should look at it is that slam is a fake if it gets taken out with little to no follow through. It means that it was fake. That's the way you should think about it. That was a shakeout. That was fake. That wasn't real. That is why it had little to no follow through, and now it's being eliminated. So I want you to put this together like, you know, every time you see a fat red bar that is not following through, there's no additional red, or if there is little and then it pops back up and it takes out the high of that fat bar, track it. I want you to start tracking these. I want you to go back in the past and find some of them, but I also want you to practice becoming aware of them as they're happening during your trading period.